Hello, everyone, and thank you for joining us today. Today, we have a live stream session. This live stream session is a part of our series called How Bali Really Works. And this is the first event of the series. And during this live stream, we basically will be talking about why the Bali market feels confusing right now, and uncovering, some of the narrative conflicts and the confusions and where this is coming from, and also sharing, perspectives from different sides and angles. And today we've got Tom, who is the founder of REID, one of the strongest analytical, partners in Bali. And we also have got today Sergei, a founder of Wellstate agency, operating here in Bali as well. So I would love you guys to have a couple of words first to introduce yourself before we start and get into the discussion. Tom?
Sure. Hi, everyone. First of all, thanks, Oxo and Diana, for having me. My name is Tom, as Diana said, one of the co-founders of REID. We specialize in Bali real estate data. We've just released our 2025 report, and we provide sort of insights and trends into the market to kind of uncover what's really happening.
Very happy to have you today. Thank you. Sergei, maybe a couple of words from you as well.
Yeah, thank you. My name is Sergei. I'm owner of the Wellstate properties. We are focused on premium and investment real estate. Our team had experience around $1 million total sales in Bali and around 4 years totally in real estate market in Bali.
That's really strong. Some of the things that you mentioned, I didn't actually know. So good to hear. Again, thanks for joining us, joining me, and joining our audience today. What I would love to start with is probably just giving some context and why are we actually talking about this today. So we all know that over the past years, Bali has experienced something like genuinely impressive. There's a strong influx of global attention. There is investment capital. There is international demand, and this is actually fundamentally positive because what it indicates, what it shows, is that Bali is taken seriously, and increasingly being taken seriously as a long-term market with real momentum, and not just a lifestyle destination. And at the same time, whenever the market grows, especially if it grows at such a speed, if it grows quickly, a lot of expectations also grow quickly. And what we see today is that many investors feel uncertain, but not because fundamentals are weak, but because the market has entered a new phase. And this new phase is where reality is becoming more structured, more detailed, more specific, and much more operational. And one of the biggest changes is the scale of the inventory, because over the last few years, Bali has has experienced a major wave of new projects, and many of these developments are now moving from the sales phase into the actual execution phase. And the shift changes the market dynamics as well, because performance is no longer theoretical. It's actually here. It becomes measurable, like in real time. At the same time, the regulations are tightening. The standards are rising, the competition is increasing. What we're seeing is that, a market is actually forming up and maturing. And it's also, professionalizing, which is great. And, this next phase tends to, reward, of course, operators who are considering these new changes, and products that are more structured and, disciplined in a way. I think the goal of today's conversation is simple, which is basically to make the current market, easier to understand, and to help investors in our community read it more clearly. So, today we will intentionally, stop short of any kind of solutions because this is not what we're going to talk about. We're not going to talk about what is next. What we want to focus is first to agree on what is actually happening on the market. To begin with, I'd like to explore the gap between why Bali is often talked about in a certain way and what are the numbers actually showing right now. So we'll start with you, Tom. Looking at the last few years of market data, where do you actually see expectations and long-term market capacity starting to diverge? And maybe even how much of that is driven by the actual speed of inventory growth?
Sure. I think you touched on a lot of, I guess, the points there in terms of what we've seen happen in the market over the last few years. So, on the back of sort of 2022, the market sort of underwent a rapid expansion for a couple of years there. And in 2025, we've sort of seen the consolidation of the market. And by that, we sort of mean a slowing of inventory growth, so slowing of supply, and also a slight sort of slowing of sales as well. And I think where the, I guess, divergence has come there, that expansion was based on the fundamentals of the market, which is really good. It's a very strong tourism-led market. Foreign arrivals are increasing year on year. And so that fundamental reason of wanting to invest and wanting to bring new inventory to market absolutely makes sense. The scale of that, however, in the last few years has been maybe a little overextended to what would be sort of a normal pace of growth. So I think in 2025, we started to see that pull back a little bit as people started to, one, understand the depth of competition that was in the market, but also to understand that Bali is not necessarily this boom or bust market. It's actually quite a steady market that has, actually quite steady growth. And again, if you look at the fundamental driver of the market, the tourism sector, pre-COVID and then post-COVID has actually been quite steady in its growth. So it's not this kind of crazy sort of peaks and troughs that might either scare or entice people to come to the market. And I think once people start to go, okay, it's a little bit more stable than that. And I think seeing some of this stabilization and consolidation in the market, it is a little bit scary if you kind of have overinvested or have kind of over leveraged yourself, but it's also really supporting and really confidence building if it's like, actually, no, I've taken a long-term, much more steady approach to this market.
Yep. And I think, it's definitely good to hear. And I think, of course, it all made sense at the point where the decisions, were taken. And, many projections then, made sense at the time as well. Sergei, from your perspective, what made those projections, feel reasonable in that phase of the market? Even if they are harder to kind of, reproduce under today's condition?
Yeah, thank you for the question. There is a simple metaphor that on fertile land, you can just plant anything and it will grow. Yeah, and that's really like market looks like after COVID time. Yes, and the market was expanding really fast. It was more soft, much softer law and less competitions. Yeah, it's low competitors was. In that environment, a lot of projects deliver solid returns. And so these predictions didn't feel unrealistic. Yeah, they just reflected the phase was market was. Yeah. Now land still fertile, but now it's really, really important what do you buy. And the main questions, as I see, it's how it's managed. In that time, it's just not enough to plant anything on that land. You have to choose what exactly projects, what exactly model or idea of that projects you can buy or construct.
Yep, absolutely makes sense. And I think, you've touched this point that actually, it all made sense at the time. And sometimes even, similar kind of things, can make sense and be very clear to, one investor, and like deeply uncertain and unclear to another one. Even though both are experienced, even both have like kind of background in the real estate. I think, I've got a question that I actually want to ask both of you, and let's start with Sergei. What do you think that, what happens in Bali, like now kind of thing? Which assumptions tend to create clarity, let's say, versus confusion nowadays? Sergei?
Okay. Yep. Now, like as I told, the market was growing and forgive a lot of mistakes. Yeah, you can buy really anything and can earn money. And nowadays, that is really a lot more thing that you have to think about. It's location. It can be trends, structure, building standards, rules, structure of the deal. It's a freehold or leasehold, taxation, liquidity, and exit strategy. It can be what?
Sounds quite overwhelming. Yeah.
Sorry. Yeah, for someone, it can be feel a bit complicated. It's like same on the stock market. If you beginner and you try entering from the scratch and you don't have any investor advisors, it's really difficult to find some really good company that you're ready to invest. And that's why I think that the future in the Bali market, it's not only just try to buy something, because when you just buy, it's just first phase of your investment journey. And I think that if you have some investor advisors, that's journey really easy and really easy to manage your asset.
That's a very beautiful thought, which is, I think, very relevant to real estate, but also, anything, new and complicated, and, the criteria that you've mentioned, it actually, yeah, they do sound overwhelming. What do you think about it?
I think Sergei's. Oh yeah,
sorry.
You go, Sergei.
Yeah, go ahead. Sorry.
Well, I think Sergei's right. Like, it is a very layered and complex market. I guess it's surprisingly complex in the sense that, a lot of people kind of expect Bali, it's a small island, it should be a relatively simple place to do business, but it actually does have a lot of depth to it. I think one of the reasons there maybe is sometimes some confusion in the market is because it's also that complexity is not just from like a regulatory or a standards point of view. It's also from, a location point of view. Like if we look at Bukit, which we classify as sort of South Badung, like that's almost an entirely new market that's kind of cropped up in the last few years. And so that naturally is going to be different from sort of the Canggu, North Badung area. But, they're within the same regencies, but they're fundamentally kind of different markets. And I think sometimes people take like a very top line view of Bali, but then apply it kind of across the board. But there's nuance in each of these markets. And you sort of do need to get really specialized or detailed information for specific locations, along with all of that regulatory and sort of, legal guidelines as well. So it's not a simple market. If you're kind of coming at it from a top line or top level point of view. But if you do have the right partner, if you do have the right information, there actually is really great, I guess, opportunities that do exist within Bali.
Yep, that absolutely agree. Information and having the right partner, and maybe even having, opportunity to get several, points of view to better understand of what's happening and what is changing, and what are potential pros and cons is critical. Absolutely. As more projects move into the delivery phase, into operations, I think, what also becomes more and more important is actual performance. Like the real, and transparency around like what's going on after the project has been delivered. what's what I think would be interesting to hear is, Sergei, from your perspective, working with investors, what typically becomes more visible at this stage? What's not fully kind of available, or what was not fully felt during the sales stage?
Yeah, thank you, Diana. That like we understood that performance doesn't depend only on the projects or concept. It's a lot depends on the quality of the management company, because that's when the project delivered. It's finished about the finance model and theory, yeah, and reality begins. In that case, yeah, we seen same property that have different management company during the period, and they produce different results. But it's, as I told, it's same property, same concept, same villa, and in some cases the gap in returns was 20-30%, and it's really huge difference for income for investors. After, I think the second point, the biggest point, it's about construction quality. It's really hard to rent out the property that keeps leaking. Yeah, in last 2 years in Bali was really big, I don't know, months and seasons, and it's really difficult to get money if your property repeatedly closed for repairs. This really things that many people overlook at the start, because they try to focus too much on the lowest price per square meter and try to compare things that don't affect real income.
Yeah, absolutely. And to reflect on that, I think, we've also experienced that, with our management company as well, when you look at the, very similar products, same location, two management companies, and then they show very different results. And then you basically see what's going on with the property that has been, under operations for several years, and it can show completely different, situation inside of the villa, inside of the unit, which again results in, an interesting, kind of conversation with investors, where one can be, delivering stable income, and having some extra years until it actually will require renovation, against the case where it's actually pretty more intense in terms of the rundown, and they need to make some changes, renovations, and investment again from the investor. Moving to a more reflective question, I think what would be interesting to hear from your perspective is, in a market like Bali, where storytelling, I think it's clear for everyone that storytelling has played a strong, strong role in the recent years. How do developers, agents, investors, all of these different kind of actors shape the narrative that people believe about performance and the certainty, when taking the decision? Let's start with you, Sergei. Sergei?
Yeah. Sorry, could you repeat the question? Sorry.
Yeah, I was asking, in a market like Bali, where a lot is shaped by the, storytelling and the narrative that's being told. How do agents, developers, investors actually shape, the narrative that people tend to believe, about both performance and how does the certainty and success looks like?
Yeah, I think that it's not only Bali any news yet. I think now Bali market is growing, and it's like a mature real estate markets, because 5 years ago it was really growing like a baby markets. Yeah, and now for me the good signal when high net investors funds are now interested in Bali. A lot of new hotel operators entering the markets like Mandarin and other big international brands come to the Bali. And for now, the main signal for us that funds and high net investors, they focus on investment risk, not only at the yield income. Yes, and for sure, if you try just to buy direct to developer, you don't don't spend time to make some research, you can buy something that and to find that that was really news about the Bali. But if you find some advisor, find really good company developers, local developers, foreign developers that already delivered the project, I can show you really reporting in the income. It's much easier to choose. You don't need to see the news if you see the real report from performance in the 2025, 2024. Yes. In that case, I think that developers and the real estate agents have to show the positive things in Bali, and it's about the reducing risk, stricter regulation, and for sure that grow the price, because all that you have to pay. Yeah, about PBG, SLF, that grow your square meters. An investor that invested 2-3 years ago, same, their property and asset growing. That's why I think that in all the market you can find some bad things and good things, and it depends on where you focus. That's all.
That's a good point. That's a good point. Tom, what are your thoughts on that?
Yeah, look, I think Sergei makes a really good point around historical performance. You know, there's a wealth of, I guess, developers and operators in the market now who would have really clear track records. I think the really interesting thing about Bali is that as an investment location, or as a location you can actually possibly buy an investment or part-time family home in, it already has this amazing story to tell in terms of the island that it is. It recently just got voted #1 sort of destination in the world again. So it's continually at the top of, desirable locations in the world. So it already has this kind of beautiful story. It's already got clear track record of performing and being the destination that people want to sort of go to, and there's a demand there. Obviously, we're a little data biased. We feel that if you just couple that with really basic kind of fundamental numbers, it really starts to build a very compelling story. And it doesn't have to be these numbers of where you're picking like sort of high season occupancy or high season rates. I think mature investors and even people who are maybe a little bit skeptical of the market, they would prefer to see consistency. They would prefer to see, okay, well, what happens when supply doubles, which it's pretty much done in the rental sector, yet the occupancy rate has pretty much stayed consistent throughout that time. And that's a really strong story to tell. It's like, even with, this demand, this sort of supply pressure, the market still performs. The market still has strong fundamentals. And I think pointing to that consistency, pointing to that track record, coupled with, the beautiful Bali story that already exists without us, it's a very compelling kind of narrative to put together.
I think yes. Is it Tom or us?
Yeah.
Yeah. Okay. Got you back. Just lost you for a couple of seconds. I think if we move to kind of one step back when we talked about information. In the era where actually we can access any kind of information, if we want to, in a way. Where do you think? When is the point? Tom, a question to you. When do you think is the point where information stop actually creating clarity and where it start creating confusion? And especially in a market like where still there's like benchmarks and information can widely, vary.
Yeah, I think one of the scary things about data and information can be it becomes overwhelming with a lot of numbers, and it gets almost a little too heavy very quickly. So I think when you're dealing with looking at whether it be performance numbers or even market numbers, you want to have a bit of a hypothesis or a question that you want answered first. You don't just want to dive in and say, "Hey, tell me the numbers in the market." You kind of want to have a framework to work within to begin with. So I think when it comes to that, kind of give yourself some guidelines. Don't go in sort of completely open. Sort of say, okay, I'm looking in this location, in this sort of category, maybe 2-bedroom apartment. Have that guideline first and maybe a hypothesis that goes with that. And then if, depending on the answers that you find, then you can maybe reshape your hypothesis, or maybe you confirm your hypothesis, and then you can really get the clearest answers. And if you do just kind of say, throw all the information at me, then you will get lost very quickly.
Yeah, I feel you. I think you both, previously during this conversation already mentioned that the market is, maturing, and the market is professionalizing. Sergei, from your perspective, what signals actually show that the market is professionalizing and maturing?
Yeah, it's a good question. And I think, as I told before, the best signal that high net investors, funds, ready to invest in Bali market, because we had some conversation with the funds 3-4 years ago, and all of them told us that the compliance risk, and their lawyers told never invest in Indonesia, because it's impossible to understand what the regulation, how to find exactly land that can be really secure and safety. Now they're ready and open, and they invest in the big hotels, not only in Bali, but whole Indonesia, like Lamba Baja and other big players already had chain hotels in that place. And for us, it's a good signal, because when big players come to the Bali, they build the ecosystem, not for only their projects, but for whole Bali, because they raise standards in management, in quality and transparency. And that's why all other neighbors have to be stronger. It's not just enough now just make Airbnb and cut the price, because a lot of projects now, and now a lot of developers thinking not only about square meters and how to earn money. They really need to understand how they can have that competition with the big hotels. That's why it's a really good signals, and the good signals for us that now it's possible to find strong lawyers and make due diligence clearly on 99% for sure, like in all the countries. And for funds, their expectation less than were before, like 20%. Like 5 years ago, all people expected 20%. Now, a lot of investors just expecting around 10-12. And that's one more signals that market is mature, and that legal structure much easier now to do really all clear. And some easiest way to make a freehold, to buy a freehold. That's a good point. Yes, as I know from the Tom reports, now around 20% of the market it's a freehold. It's really big numbers, because before I think was around 10%, less than 10% what the freehold total in the market. Now big company and business can invest in that hotels. I think it's a really good signal for us.
Yeah, very good. I think that might have been a very good spot to add the guys' freehold properties, but we won't do that. Tom, from your side, the signals that Sergei has mentioned. What are the signals you think are actually attracting a lot of attention, but might be confusing? Like especially if you don't kind of dive deeper as an investor.
Sure. I think this past year in 2025, there was a little bit of concern maybe around sort of price growth and sales volume within the market. I think when it comes to sales volume, that has relatively remained steady. I think we kind of have to take that into consideration with the rate of expansion within the market. So I would say sales volume is actually still quite healthy. And also when we look at sort of price appreciation as well, that's a really tricky metric, because if you actually look at the top line numbers, the median price within the market has actually come down a few percentage points. And that might be a concern for people, but if you actually dig into what that means, it's actually not from a value loss point of view. It's actually because of a recomposition of the market. And by that, we mean that people are now purchasing different types of assets. Apartments, 1-2 bedroom villas, these have become like a really strong component of the market. 1 and 2 bedroom villas actually lead the bulk of sales now. And because of that, it's actually kind of reshaped what the Bali real estate market looks like. And so that has shifted prices downwards, but it hasn't actually reduced value. So I think that's something that sometimes people can look at and be like, hang on, prices are going down, the market must be, it must be failing, but it's actually not that. The market is it's actually quite a young market. And so it's susceptible to these fluctuations of, there's a new component in the market that's going to have an outweighed impact. So I think that's definitely an area that people should definitely investigate further when they are looking at some top line numbers.
That's a very interesting point. Thank you for this, Tom. I think the next one is an interesting one. So, Sergei, looking back, with all the experience that you and your team and actually has, what is the one question that investors often they wish they have asked much earlier?
Yeah, I think the most popular question, why didn't I buy 2 units instead of 1? Yeah, for sure, it's a joke. I think that all question about liquidity, because the easiest part in investment, that is entering in investment. Yeah, but many investors unfortunately don't plan ahead when it comes to exiting. And people often don't ask a question about when they plan to exit, who exactly will buy the property to, and why next buyer should buy that property. And all question about liquidity, it's really many factors. It's deal structure, leasehold, freehold, asset type. It can be apartments, it can be townhouses, villa, location matters. And not just location, and that's mean what type of the renting can use. It's long term, it's short term, and number of similar units. For example, if it's apartment same like 100 in the complex, it's really difficult to sell, and you don't have any benefits. You can just cut down the price. It's only one option to be like first want to sell that. And I think for many investors need ask that all questions about the liquidity and have a clear strategy. Because if you have strategy, market ups and down become less stressful. Yeah, and over time you can achieve the results what you want, like on the stock markets. Yeah, if you see the 5-10 years, it's really totally growing, but for sure you have some waves in a short period of the time. Same in that type of the investment, because I think that a property is just a tool, but your mindset have to be like investor. It doesn't matter property, stock market, gold, Bitcoin or other. You have to be same mindset like investor when you try to buy. On the first stage, you already need to ask questions about your strategy and exit. It's the main question that I think for investment matter.
That's a very nice recommendation, I think, to those investors who are listening to us today, to fully understand the investment strategy, investment plan 360 from the entry all the way to the exit. Tom, from your perspective, what is the one area that you think should not be underestimated, especially under current conditions and even moving forward?
Yeah, well, I think a little bit to Sergei's point, when you're considering your exit strategy, I think especially in a market that's kind of going through a bit of consolidation, it's always good to go back to basics. I think first and foremost, the one you really don't want to underestimate, is your lease term or your type of tenure. So if you are getting freehold, obviously you kind of can bypass that. But if you are taking a leasehold, you want to be clear what your lease term is, what your conditions of extension are, so that you can actually have a pretty clear idea around what your exit strategy may be and how long you might want to hold the property for. Naturally, a leasehold property is a depreciating asset, so you have to be wise about how you're actually going to make it a positive yield sort of period and then possibly sell it. I think also within that, we don't see a lot of very quick sales, like in terms of someone buying and then selling within a couple of years. That kind of goes back to what I mentioned around capital appreciation. There is slight capital appreciation, but the market remains pretty steady. So, your lease term is something really important to look at when strategizing, because essentially you can have up to 30 years there. So that's a really long period, and that you should have that long-term view. And again, I think in a consolidating market, going back to the simple basics of real estate about location, 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 in the last few years, in the kind of the rapid expansion of the market, we saw a lot of fringe markets pop up where people went, this will be the next hotspot. This will be, the market that will really grow. But fundamentally, real estate is a slow moving industry. Cycles typically are sort of 7 to 10 years. South Badung or Bukit has really exploded, and that kind of popped up in the last few years. But with a slowdown of expansion, we don't really see many more fringe markets actually coming up and being able to kind of, I guess, get the headlines. So, really kind of looking back at some of those core markets and seeing what's on offer in those core markets, I think is wise as well over the next few years, because there is still a lot of supply in those areas. Some of the fringe markets still need a bit of infrastructure build out, amenity build out. So really, I would say, current conditions would be kind of go back to basics a little bit.
Yeah. Tom, I think I've got a last one for you. How would this actually differ if we're going to talk about freehold in terms of what else to look at,
Yeah, when you're looking at freehold, you obviously have a much longer tenure. You've got essentially you've got it in perpetuity. You've got ownership in perpetuity. So first and foremost, there your capital appreciation is a lot more secure. You're not holding a depreciating asset. You will be coming at a higher price point because of that. Naturally, freehold does sell at a higher price point. So the consideration there is like, what is your objective? Naturally, because of the higher price point, your yield is going to be lower, but you are getting that offset by some capital appreciation. So again, it kind of comes back to a strategic point of view, but also, I guess, maybe a risk tolerance. If you are going into the leasehold market, understanding, the actual nature of a leasehold asset and its depreciating nature. And so that's the question that an investor should really answer before they kind of decide which lane to get in. Do they have the capital available for a freehold? And if they do, can they find an asset that, meets their criteria and is something they want to invest in? As Sergei mentioned, it's only about 20% of the market, so it's not a huge component of the market. There isn't as many options as leasehold. But, if you can clear some of those barriers and if you work with the right partner to sort of set up all of the legal structures and the ownership structures of a freehold asset, then there is a little bit more security and a little bit more of a long-term outlook on that asset class.
Thank you, Tom. I think that's exactly, kind of questions that we wanted to unpack today. Again, it's actually really nice to see that there is like a structural, like system change with the things that you've already mentioned during today, with the new inventory coming, with the standards, with the performance clarity that is driven by actual numbers, with the regulations that evolve, and also with the new type of capital that is entering Bali market right now, like institutional capital as well. But this and many more other things that you've mentioned today, just being a sign that the market is actually becoming, more mature, more real, more professional. And just to wrap the things up, kind of next week, we'll take this one level deeper. Should be going this, not up, one level deeper. And we will look at what actually sits, beneath this and beneath the headlines in terms of structure, in terms of legal aspects, operations, taxation, economically as well. And what that means for investors, who are now looking to navigate Bali with much more confidence. Thank you very much, both Sergei and Tom. It was a pleasure having you both. And, for the rest of the audience, we'll see you at our next webinar. Though we have got a couple of questions, but I think we would want to address before we go. So the first one is, if the investor has got 300 to 500,000 United States dollars, what is the most liquid property you recommend?
For sure, okay. Oxo for sure, Diane.
By the way, the questions are not
Does that come from Oxo?
Not paid.
Yeah, but seriously, I think it's all about strategy and your goals. Because if your goal capital appreciations, you have to find something on a pre-sale. Yeah, it's something with a high risk, but anyway, it depends on the goal. Yes, I think that if we talk about 500, because 500, it's a big difference. It's twice. Yeah, you already can find something on a freehold. As we told that it's only 20%. Yeah, because it's 80% of leasehold. That liquidity of freehold is bigger. And for sure, if it's possible to find something on an ocean view, canyon view, jungle view, rice field view, and it can be some protection with that it will be all the time, for sure the best options, because ocean view, I think it's the most expensive word in the world. Yeah, it's ocean view. Any type of the view and some unique design, timeless design, wellness design, something with a really good concept. It's I think for $600,000 possible to find, and for sure I think it's the best options. It's a villa. Yeah, it's not just an apartment. It's not just some type of the townhouse. I think the best options will be villa with some territory. I think that possible to rent out for short term, and it's possible to buy for living, because I think the main reason for the buyers, is it possible to use like a rental, like an investment, and is it possible to use for living? If you have these both options, the liquidity is higher, because you can find any other customers who can buy, live. Because I think all European customers, when they try to find some investment option in Bali, they're thinking about that they can move in the future Bali and have some vacation, or just make remotely like nomad people. I think the best options, it's a freehold view concept or wellness and with some territory for that villa.
Good. I hope you guys also made some notes to make sure that all of the mentioned is considered. We've got another question from the audience, which I think should go to Tom. What is the average purchase price in Bali? Let's say if we look at 2025.
Sure. So we use median as the metric. It's a more accurate read of the market. So for leasehold, the median price is 280,000, which is, as I mentioned before, top line slightly down from 2024. And for freehold, the median is just over 500,000. I think it sits about 505,000, which is actually up about 5% from 2024. Obviously, once you get into different categories of villas and apartments and different categories of bedrooms, it's obviously different price points out there, but top line, that's what leasehold and freehold markets are doing.
Clear. Another one that we've got, is it better to overpay for infrastructure in terms of occupancy and long term? This is what someone is asking, or it actually doesn't matter, and just kind of buy an outstanding villa. I hope I understood you correctly. Sergei, I guess it goes to you. Is paying more attention to infrastructure actually, matters in terms of occupancy in long term and the overall, revenue and profit results?
For sure, but it depends on the area. For example, if you see the Nusa Dua, and that's no any infrastructure objects in that area. That's why all 5-star big brands hotel have infrastructure inside. And when you try to book something, for sure you see the list of the facilities and amenities that you can use. I think for the long terms and for the best ROI models, really matter what infrastructure will be, but not just any infrastructure. It's about the concept. If it's wellness concept, it's all infrastructure about spa, massage, and other wellness points inside. And for sure, now I think the most expensive market, it's wellness market. Because people thinking about their health, about their mental. That's why wellness infrastructure can grow ADR price on 30-40% or more if you have than just one separate villa. But sometimes if you have a huge villa, I don't know, $1, $2, $3 million on the cliff without any infrastructure, it can work too, but you can have a chef, another that bring to your villa. It depends really on the budget. For me, complex with infrastructure, more liquidity and easy to sell, but not a huge, some boutique hotels. The best options with inside focus on some concept infrastructure that they have. For me, the best options, I think.
That makes sense. Just to reflect on what you've mentioned, I think we've been, deep diving into what wellness means nowadays, and also in connection to real estate. And what's really interesting is that we are seeing there's actually kind of two directions nowadays. One, which is more functional. How do we utilize wellness to make our bodies and minds function in a better, more efficient way, and more, which is quieter, more supportive, more, less efficiency driven, and more kind of restoration, rest, turned kind of inwards in a way. I think, this was the last question. And, once again, I really appreciate both of you joining. And Tom, I will see you at our webinar next week. Sergei, yes. I'll see you in a couple of more events, hopefully, when you guys are going to join us again. Thank you very much, and we'll see you guys at our next webinar, which will be dedicated more to specific questions on legal, taxation, structural changes, operational changes and implications that are happening right now in the market. Thank you.
Thank you, Diana.
Thank
Thank you,
you.
guys.